Please welcome to the stage the host of the show, the truly amazing, good-looking, well-dressed Mike Butcher!
Hello, ladies and gentlemen. Welcome to the game show Investors Feud! Now, I'm sure many of you are familiar with the rules of this game show, but allow me to introduce my guests. First up, Mr. Gil Dibner from DFJ Esprit. Let's hear it for Gil. Mr. Nenad Marovac from DN Capital. They're standing up. And finally, Mr. Mignot. Oh yes, he is very French. From Index Ventures. Ladies and gentlemen, welcome to Investors Feud! So, gentlemen, how are you feeling?
Great.
Good.
Great.
Up for a fight.
So tell me, now, first of all, let's ask our first question of our contestants. We asked 100 people from the startup community, why do startups fail in Europe? Can I have your first answer, please, Mr. Martin Mignot?
They can't find the right problem to solve.
You can't find the right problem to solve.
Yeah.
We asked 100 entrepreneurs here at Pioneers Festival that same question, and their answer was... Oh,
Run
dear.
out of cash. No.
No.
Really?
Why do startups fail in Europe? Your answer, please.
They run out of cash. That's why we're here.
Run out of cash or lack of funding? Well, survey said... Oh! 21 of our
I've been doing
answers.
this longer than he has.
And finally, Mr. Gil Dibner for Index Ventures. Can I have your answer, please? Why do startups fail in Europe? Your answer, sir.
Lack of companies that acquire.
Well, was that, no, let's call that no market fit. Was no market fit up there?
That's what I meant. No market fit. Yes.
Oh! Boom.
That's what
That's what he said.
Fantastic. Oh! What a shame. Okay. Ladies and gentlemen.
Number one.
Now, let me just be slightly serious for a second here. Hold that.
Uh-oh.
Right, now that's better. Right, there you go.
Whoa.
Right, gentlemen. Right, let's have a little bit of a chat now. Let me be serious here. We have some serious VCs, so let's ask some serious questions. My name is Mike Butcher. I'm the editor-at-large for Techcrunch. We have here Mr. Martin Mignot from Index Ventures. Now, Index Ventures is very well known, as you know, for investing in a ton of startups. They've had a lot of exits over the last few months. Then we have DFJ, Gil Dibner. Gil is the partner at DFJ, who's very associated with enterprise startups. And also, finally, we have Nenad, who's early investor in Shazam, for instance, at DN Capital. And they are doing a lot of Series A's and seed rounds and things like that. So guys, just to have a quick chat briefly, what I'd like to know from you is where we are in the VC landscape right now in Europe. Do you feel positive? Do you feel upbeat? Do you feel that this is now the time for Europe, or do you feel it's more of the same? What do you think, Gil?
I think it's a great time. I'm relatively new to this scene here in Europe. I came over 2 years ago from the Tel Aviv scene, which has been going strong for well over a decade. I think people are figuring Europe out. I think the entrepreneurs are figuring out how to play the game. European VCs are getting better. You just raised a big fund. You guys just raised a big fund. And I think more and more European startups and entrepreneurs are seeing themselves as part of the global startup scene. So I see entrepreneurs that are, instead of meeting them on their way over to YC, I meet them on their way back from YC. And I think that's a really positive sign.
What about you, Nenad? Do you feel that any tangible change in the air or not?
I would say on the funding side, it's definitely improving. I'm a little worried about the number of accelerators, incubators, and everything that seems to be popping up.
Why are you worried about that? Valuations are too high?
It has a little bit of an echo of 1999 right now. A lot of people jumping in the market.
Isn't that kind of a good thing for entrepreneurs? Their valuation of their company goes up?
As long as the fundamentals are there, that's fine. But if you want really high valuations and if you want your valuation here and your fundamentals are here, eventually that gap is going to meet, and that's when there's usually lots of tears. So I'm cautious.
Google Ventures. Now, they've launched Google Ventures in Europe now. Martin, what do you think of that? Do you think that Google Ventures is going to work collaboratively with VCs in Europe now? Or are they going to kind of undercut you guys and they're going to invest at early stage and, you know, put a bomb in the room, as it were, in Europe?
There's not enough funding in Europe in general, so you know, any new fund is more than welcome.
There's not enough cash in Europe?
Yeah, there's not enough cash, definitely. It's still a very small industry, you know.
What do you guys think about Google Ventures in Europe?
So yeah, we're going to work with them, of course.
Are you, well, you must know all of them.
I like the people. I think it's a non-issue.
A what?
A non-issue.
It's a non-issue.
No, it's a positive more than a non-issue.
It's positive, yeah, but it's not. I mean, some of my companies wouldn't want to have Google in their capital structure because they want to sell to Google. So I think it's a positive. The good people, though, very good people. So.
Yeah, what do you think?
I think it's a great signal of what we've been talking about, that people from the Valley are taking Europe very, very seriously. I don't agree with the thesis that another 100 million from Google a year in Europe is going to fundamentally change the amount of entrepreneurship or how good the companies are, how fast they grow, right? Because the same people that are going to be raising money from Google Ventures in London next year could have gone on a plane and gone to the Valley and probably have raised money from them and from any other VC in the world as well. Yeah. I think it's more a sign that the world is taking Europe very, very seriously, and the three of us and everyone else have to compete harder with yet another player, and I think that's healthy for everyone.
Google famously picked up Waze out of Israel originally, and of course did very well in the US. Do you think that they want to get more of a kind of visibility into the that kind of high-tech scene, such as in Israel or Eastern Europe?
Yeah, I mean, Google has a huge presence in Israel and has had for a long time. They have a campus there. They have an active corp dev team there, a venture team there. So they're fully on the ground in Israel and like many, many others. And I think it's great that they're doing that in London as well.
What are you guys interested in now? Do you want to get it in? I mean, we've got a lot of entrepreneurs here from Central Europe as well, because Vienna is so well located for Central Europe and also Germany and Western Europe. It's the meeting of West and East to some extent. What are you most interested in? Are you interested in geography, or are you interested in trends, or are you interested in, I mean, I know that you're obviously very interested in the enterprise. You guys just invested in the Crate, which was the winner of Techcrunch Disrupt in London.
And they're about to win Pioneers as well.
And it's about to win tomorrow, you think?
They're about to win Pioneers.
Ah, very confident. Obviously, you're very interested in enterprise. You think Europe's been traditionally strong in enterprise, hasn't it?
Yeah, I mean, look, I think coming as a newcomer to Europe, I think one thing I can say is I think the European startup scene is obsessed with geography. It's all people talk about. You know, what do you think of the scene in Prague, and what do you think of the scene in Stockholm and London and Edinburgh and Manchester and Vienna? I think when you look at entrepreneurship in Europe broadly without a geographic lens, what you see is great entrepreneurs distributed pretty much evenly across Europe. In some ecosystems, they have access to more resources. In some ecosystems, they have less. Sometimes they move, sometimes they stay. But fundamental entrepreneurship is distributed pretty evenly, whether it's enterprise or consumer. And I think all of us are looking in a pan-European basis. And so it's kind of a fun parlor game to talk about, is Berlin better than Stockholm? But I think I've seen really interesting companies, like Crate came from Austria. I've seen really interesting scalable data store companies coming from La Spezia, Italy, which I don't think is on anyone's map of hotspot places. So
would you say, Nenad, that what would your advice be to entrepreneurs in Europe? Just get on a plane, or do you want the guys to come see you? Do you want them to stay where they are so you can find them and uncover them?
Yeah, so we're headquartered in London. We focus on the UK, Germany, and also the Nordics, as well as Silicon Valley. So one of the few firms in Europe that also has a Silicon Valley office. The reason for that, out of our 10 exits, 9 have been to US buyers, and the other one's been to a South African buyer. So we're very conscious that we need to have a foothold in Silicon Valley. That being said, so one of our companies today was Avigant, who you saw with the basically way to not old, what did he call it? Reality anyway.
Yeah.
You know what I'm talking about. We do a lot of stuff in Germany, ex-Rocket alumni. We're very bullish on what Ollie Samwar has done in Berlin and also for the community in Dach as a whole. So a lot of our CEOs.
You don't think he's the Dark Lord of Evil?
I think there should be a statue of Ollie Samwar in Berlin. Actually, what he's done for the European community is second to none out of anybody in this room or any conference you go to, from one perspective. The UK, we see a lot more enterprise software. We do a lot of things similar to what Gil does over here.
What about?
Yeah.
Sorry, carry
That's
on.
it. But no, we don't expect anyone to come see us. We get on a plane. You'll see, we're everywhere.
So go and pitch Nenad, go and pitch all these guys. They'll come and see you get on a plane. What about you? What is early stage now anyway? Is it pre-Series A? What is it? I mean, where's the money? Because we've seen the rise of a lot of micro VC funds now. Like, for instance, in London, we've got a bunch of them, Episode 1, Connect, Hoxton, etc. What is it to be a VC now in the early stage space?
I mean, if you look at it from the entrepreneur's point of view, it's getting cheaper to get started and distribute their product. And so it allowed a lot of smaller funds to get started and make significant impact in the beginning of the companies. So we at Index have a dedicated seed fund, and we kind of start investing between 400K, 500K, kind of just right after the early angels and sometimes these micro VC. Sometimes we do invest just after them, sometimes with them. But we started about that range, so 400, 500K, and we'd like to see kind of a working product and some early numbers that show some level of the product market fit that we mentioned before.
Do you want to see revenues?
No, not necessarily revenues. Depends on the type of company, but we need to see some numbers that show that people are interested in what you've built.
Now, you guys obviously sometimes compete on deals, but you also compete on, often obviously, but you also sometimes collaborate or co-invest. Is the market going to become more competitive now for term sheets over the next couple of years, or similar to what it was before? Gil?
I think VCs are always going to work together because it's part of the physics of the way the venture model works, right? If you take all of a round and things don't go super smoothly, you're on the hook for the entire rescue mission, right? When the entrepreneur calls you up and says, I'm out of cash, I need help, it's all you, right? So that dynamic will always be there. I think people talk about fear versus greed. I think when greed rules the day, VCs tend to be a little more greedy and take bigger rounds and take more of the round. And I think when fear returns to the market, which it inevitably will, I don't know if it's going to be tomorrow or in 3 years, but it'll come back, VCs are going to err a little bit more on the side of cooperating and working together a little bit more openly. But at DFJ, we syndicate. When I was at Index, we syndicated all the time. So I was in Israel, we syndicated all the time. And as a young VC, it was something, I would sort of come to my partners and say, I can do the whole round. And they'd be like, why the hell would you want to do that? It's something that you learn with experience when you've been burned a few times, that it makes sense to have more pockets around the table, more smart people around the table, hopefully, just more perspectives in the boardroom. And I think it makes for a healthier business overall. And I think it really ultimately becomes a function of what the entrepreneurs want, right? I think this is really not about VCs deciding anything. This is about entrepreneurs deciding what is the right syndicate for their business, given what they want to do.
Yeah. Comment on that. I guess as the entrepreneur, you need to figure out what type of VC you want. If you're really going for a very fast expansion plan, you better make sure your co-investors are up for that ride. So we have had instances recently where people, want to slow down and go for profitability, even though the company's ahead of budget. And that can be very frustrating for an entrepreneur. So the key for us is to find like-minded co-investors that really want to go play to win. Obviously not reckless investing, but really, if you're getting traction with a company, we don't want to stop it. We want to push hard on the accelerator.
Martin, you must obviously sometimes hear from an entrepreneur who has term sheets from these guys or from some other competing organization. What do you say to an entrepreneur when they come to you with saying that they're already talking to competing VCs? What do you say to them?
I say, of course. Otherwise, they wouldn't be good entrepreneurs. They have to do what's best for their company. And that includes trying to build a competitive process and get the better valuation and the best partner.
Do you respect them less if they come to you and say, I haven't spoken to any other VCs or investors?
I wouldn't believe them, you know.
You wouldn't believe them?
I think they would be liars. That would be even worse than not respecting them. Right?
Interesting.
Yeah, I mean, if you are trying to do what's best for a company, you know, you need to try to find the right partner.
So you always expect, you guys must always expect entrepreneurs to be talking to other people, correct?
Yeah. Yes, but within reason.
Sure, exactly, within reason. Yeah.
Within reason.
Within reason.
Yeah.
What is reasonable?
I think that, you know, like any sales pitch or anything else, you should pick the 5 VCs you really want to have. Yeah. Go to them first, see how you do, and if you don't get any traction there, then maybe go down. But if you go to 25 on day 1, and everybody knows that you're talking to everybody, that's not good. You know, similar analogies could be made in different areas of life.
If you date too many people at the same time. Yes.
And then that would prove that the person is not such a good entrepreneur, you know, because they wouldn't be focusing on what's even more important than finding the right VC, which is building a great company. Right?
Let's talk about scaling up. So there's some good companies really coming out of Europe now. We've seen some IPOs, Criteo in France, for instance, Just Eat in the UK. Index has been done very well over the last few months, involved in quite a lot of billion-dollar exits in the last year or so. Where do European companies scale up now and, you know, head towards, you know, the unicorn stage? Are they? Can we build many more unicorns, big billion-dollar companies out of Europe that stay in Europe, or are we ultimately taking them to US or to China or whatever? What do you think, Gil?
I think there's absolutely no structural limitations to unicorn construction in Europe or any other geography, right?
I think we should call it unicorn breeding. Unicorn breeding,
unicorn creation. I think the path to getting to that kind of scale depends a lot on the industry that you're in. It's very different for enterprise than it is for consumer. It's very different for consumer that's very local, like a Halo, than it is for a Spotify, which is sort of a single platform for a global audience. And I think it's very different business to business. And I think the companies that excite me the most are companies that have done a lot of deep thinking, not only about what their unique value proposition is, but what their unique growth strategy is going to be, right? Because if you're fundamentally in the business of investing in innovation itself, then it stands to reason that the growth trajectory is going to be something you're going to have to innovate around a little bit as well, right? It's not just going to be the playbook. Sometimes it is, but in many cases it's not. In many cases it's specific to what you're doing, and it has to be as much a part of your thinking as the product.
I think you mentioned that we had been kind of lucky enough to have a $5 billion exit in kind of the past 12, 18 months, which is a kind of really good result for us and for Europe. And if you look at all of these companies, they all have had very different paths to exit. You know, so Criteo listed in the US, Just Eat listed in London, King listed in the US. Supercell got acquired by an Asian investor, or kind of halfway acquired by an Asian investor. Zendesk being relocated straight in the US, like very early on in their lives. So those 5 companies have had very different paths, but they've all been kind of amazing, European billion-dollar companies. So you can find many ways and coming anywhere out of Europe.
Exciting times. Nenad.
I would comment. I would say it's up to 3 things. So it's capital, having enough capital. It's talent, having the right people, and it's the mindset. And I come back to that play-to-win mindset. And it's very different if it's your first-time entrepreneur, you've never had any money, and someone dangles the $10 million, $5 million check in front of you, you're going to be tempted to grab it. Whereas if you have good investors and they say, okay, listen, you can take some money off the table, pay off your mortgage, get a little bit of money off the table, so take the stress off of turning down the 5 or 10 million to go for the 100, right? Because that's what we're talking about. Good entrepreneur should own anywhere between 10, 25% of his company at time of exit. So he's trading off that 5 or 10 million for going for the big, unicorn/play, but he's got to have the stress taken off of him by the investors at the table as well.
There are there's smaller funds now. A lot of the bigger funds, like you guys, have raised new funds over the last year or so. Index has definitely, and DFJ, etc. What's the difference between all of you now? How do we tell the difference between one venture capitalist firm and another in Europe. What's the USP that each of you can offer that another competing firm doesn't have?
I mean, it starts with the people. So you're going to be working with one person very closely. So
a partner,
as you can see, we're not exactly, we're not.
You're not twin brothers.
We're not the same people. So we got different strengths, different weaknesses. So there's always, there is always going to be some form of.
So do you think it's about? Is it about personal chemistry, or is there something else that the firms can offer?
There's a huge part of that, and then obviously the firm brings a lot in terms of brand, but even more importantly in terms of what we do for the companies. And cash is not enough, and not enough anymore. And I know at Index we're building what we call a services layer, which are people at Index focusing entirely on helping our portfolio companies and mainly helping them kind of leverage all the knowledge and expertise that there is inside the portfolio and kind of pulling that together and make it easier if you're hiring someone, if you're looking for an office space. And here, the bigger the portfolio and the more diverse in terms of geographies and stage and sectors, the more value we think there is in that kind of network.
You guys have been pushing this service layer, which is quite common in the Valley. You have a number of people working in the firm, helping the portfolio entrepreneurs with their businesses, getting them recruiters or PR firms or office space or something. Is that really that big a deal, Nenad? Is it something that's important in Europe, or is it something that you think is a differentiator between the firms?
No, I think it's very important. I think this is how we built DN. If you take Shazam, for example, we've built half the team, putting these people into the company through our network. We took them into the US market, where it was a UK team that didn't know how to do that. But that obviously gets more difficult as you scale up. So, we had a $70 million fund before, now we have $200 million fund, and that obviously makes it more complicated. And as you get bigger, it's harder to get really close and do all that value-add work that we've done in the past, but that's our challenge.
What do you think?
I would agree. I think I think it's clear that services are becoming an important differentiator for many funds in the Valley and many funds here. And I think every fund in Europe should certainly be thinking about services very, very seriously. I think there's some things that you can only do at scale. Some of the stuff that Index and Andreessen Horowitz in particular are doing really only works at massive, massive scale when you have dozens and dozens of portfolio companies going through similar things at a similar time. There's other stuff that doesn't scale, right? I mean, helping a team hire a CMO, some of that scales and some of it doesn't scale. You have to get on the phone, you have to talk to people, interview them, use your network, and I can do that for only so many companies at a time. So we do a lot of work to help our companies. I think we can always do better. I think DFJ will be rolling out services like many other funds. But it comes down to, at the end of the day, rolling up your sleeves and working for the companies.
Do you think there should be a kind of a sales force for VCs?
What
a kind of a technology platform for venture?
We spend a lot of time thinking about how we can use software better to help us do our job. I think there are so many software platforms out there right now that entrepreneurs can use, right, that didn't exist before. So you have LinkedIn, GitHub, Crunchbase, Stack Overflow, AngelList, all kinds of tools that, frankly, are going to be way better and way more scalable than anything that any individual VC or even consortium of VCs could ever build. And I think what we're seeing is the great democratization of a lot of the information that makes this startup economy run. And sort of, it's a commoditization of some of the things that we used to do, right? So if we used to have a database of companies and investors, you don't need that anymore because you have a better one on Crunchbase, right? But there's other stuff that we do that doesn't really get commoditized as...
Right. Ladies and gentlemen, now next question in Investors Feud is, what can VCs do better in Europe? Can I ask of you, sir? Take one. Invest less conservatively, access better resources, recognize the future potential, have an entrepreneurial or operational background, or consider the team more the product. Which one would you pick, Martin Mignot?
I'd say the resources one.
You picked...
I'm not sure I understood, but I think that's what I want to say.
Better resources. You picked better resources. Yeah. Our survey said... Whoa, 17. Mr. Nenad. Invest less conservatively, access better resources, that's gone. Recognize the future potential, have entrepreneurial, operational background, or consider the team more than the product. What is your answer, sir?
Play to win.
You're playing to win. You're playing a joker.
Play to win.
Play to win.
Which one's that?
That's not an option.
Invest less conservatively. Our survey said... Oh, yeah, he's winning.
Hey, where's my prize?
22 is a higher number than 17. Yes. Right. Lastly, from that options, do you want me to read it to you again, or have you got it?
Please do, yes.
That's gone. Access better resources, recognize future potential, have operational background, or consider team more than product.
Recognize future potential.
Recognize future potential. Our survey said... Oh! Who said invest less conservatively? This man. Well, we have a winner. Okay. Way. Okay, our last question. Our last question, before we should no longer submit you to this torture. Our last question, ladies and gentlemen, Investors Feud is, where is Europe's next big thing coming from? The options are Germany, United Kingdom, yay! Poland, Austria, or Sweden. What is your answer, Gil Dibner?
Well, Crate and Roadcut are both based in Berlin, so I'm going to say Germany. Germany.
Germany. Our survey said 15. Mr. Nenad.
So define biggest thing. Market cap?
Oh, for heaven's sake.
All right, Sweden.
I give up.
Sweden.
Our survey said 2. Oh. And lastly,
I mean, these
Mr. Mignot.
These guys don't know what they're talking about. It's Austria, of course. I mean,
Okay. Austria.
come on.
France is not on the list.
Exactly.
Where's Sweden? Where was Sweden?
Oh, he
Two.
said Sweden.
You're the last one.
I said Sweden.
Yeah, you're the last.
Oh, man.
Two.
And, well, sure enough, number one won. Ladies and gentlemen, it's been my pleasure to host Investors Feud. I hope you enjoyed that. We're all really tired from standing up now, so we're going to go backstage and get drunk. See you later. Thanks very much.
Thank you.